Hey everyone, welcome back to Corporate Dakota, the place where we pull back the curtain on big business like a magician revealing their secrets. And today, Dominion Energy Incorporated is in the hot seat with a filing that is all about making a fast buck or maybe even several billion bucks. So what is going on here? Dominion Energy Inc. is basically saying, hey, we need to raise a lot of money and we're going to do it by selling a bunch of our company stock. And get this, we're talking up to $1.8 billion worth of stock. This isn't a one-off event either. They've been doing this through what they call sales agency agreements, and now they're just bumping up the amount they can sell. Think of it like a company having an open tab at a store, and they just told the store to increase their credit limit because they plan on doing some serious shopping. This is often called an at-the-market program. What does that mean in plain English? It means they can sell their stock whenever they want to, and whenever the market conditions seem right. They don't have to wait for a specific big announcement or a special event. They can just drip feed shares into the market. This gives them a lot of flexibility and means they can react quickly to their financing needs. This confirms the massive $1.8 billion figure we just talked about. They are essentially creating a big pot of company shares that they can draw from over time. This is a significant amount and signals that Dominion Energy Inc. likely has some big plans or needs to cover some big expenses. Now this part can get a little technical, but let's break it down. Imagine you want to sell something in the future, but you are worried the price might drop. So you make a deal with someone to buy it from you later at a certain price. To make sure they can deliver that thing, they might borrow it now and sell it immediately to lock in a price. That is kind of what is happening here. The financial institutions involved are borrowing Dominion Energy Inc. stock, sell it in the market to hedge themselves against any price fluctuations while Dominion Energy Inc. is setting up to potentially deliver those shares or receive cash later. It is a bit like a fancy financial juggling act to manage risk and provide the company with immediate funds or structured financing. Specifically, they're talking about collared forward transactions. This is a more sophisticated financial tool. It means there is a price range, a collar within which the transaction will happen. If the price of the stock goes too high, the company might get less money. If it goes too low, they might get more. It's a way to protect both sides to some extent, but also limits the potential upside or downside for Dominion Energy Inc. They are tweaking their deals with financial giants like Goldman Sachs Incorporated to use these more controlled methods. This indicates a desire for more predictable outcomes in their stock sales. This is a crucial point when those financial institutions borrow and sell the stock right away. Dominion Energy Inc. doesn't get any money at that exact moment. The money comes later when the deal fully settles. This means that while they are signaling a need for capital and setting up this massive sale, they aren't getting the cash instantly. This could be important if they have immediate cash flow needs. This further highlights the complexity and potential outcomes. If Dominion Energy Inc. decides to settle these deals with cash instead of physically delivering shares, they might end up owing money to the financial institutions. Or if they settle with shares, they might owe more shares. This means the $1.8 billion is not a guaranteed cash injection. It depends entirely on how these future transactions play out and the market price of their stock. They are setting up a flexible financing mechanism, but it is not as straightforward as just printing money. And here is where we see the actual paperwork, the form of amendment to sales agency agreement. This is the document detailing the updated terms of their agreements with these financial powerhouses. It shows they are actively managing their financing with established players and are adapting their strategies. There is also a legal opinion from McGuire Woods LLP involved. This is standard practice for significant financial transactions. It means legal experts have reviewed the arrangements and are providing an opinion on their legality and compliance. It adds a layer of confidence for investors that everything is above board. So let's zoom out and look at Dominion Energy Inc.'s strategy here. They are clearly in a phase where they need significant capital. The $1.8 billion plan through at the market offerings and forward transactions suggests they either have large capital expenditures planned like new energy projects or infrastructure upgrades, or they are looking to strengthen their financial position, perhaps to pay down debt or fund operations. The use of forward sale agreements and even collared forward transactions shows a sophisticated approach to managing these funding needs. They are not just selling stock blindly, they are engaging in structured financings that allow them to manage price volatility and plan for future cash flows. However, a couple of things to watch out for. First, the market program can be a double-edged sword. While it provides flexibility, it can also dilute the value of existing shares if too many are issued without a corresponding increase in company value. Investors will be watching to see how this $1.8 billion is actually used, and if it generates returns that justify the increased number of shares outstanding. Second, the forward sale agreements introduce future uncertainty. The actual cash proceeds Dominion Energy Inc. will receive are not guaranteed and depend on market conditions and their settlement choices. In terms of Dominion Energy Inc.'s direction, this filing shows a company actively managing its finances to support its operational and strategic goals. They are leveraging established financial markets and mechanisms to secure substantial funding. The key question will be how effectively they deploy this capital to drive long-term value for shareholders. The risks lie in the execution of their plans and the potential for unfavorable market movements impacting the final settlement of these forward transactions. Overall, Dominion Energy Inc. is making a bold move to secure significant financing. It is a smart strategy for a company that likely needs substantial investment to grow or maintain its operations. But like any complex financial maneuver, there are risks involved, and the ultimate success will depend on how well they navigate market dynamics and deploy the funds. Alright, that is our breakdown of Dominion Energy Inc.'s latest filing. What is your take on these numbers and what they signal for the company's future? Do you think raising this much capital through an at-the-market program is a smart move? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.